done when trading manually. I mean, you can do it. You just calculate, have a little chart, and basically have your longs and shorts, and this is what's going to happen. Also, you have to sit there, and really, in the 21st century, I don't know very many successful traders that still trade manually. If you show me someone who trades manually, I'll show you someone who could be making a whole lot more money. Now, so for best trading results, you should always use automated trading software that will never miss a trading opportunity and will manage your trades 24 hours a day. Okay, I'll show you how this works in real life. You want to see? Well, real data. Just to illustrate a few points to you, what I'm going to do, I'm going to trade only in one direction. I don't know which way the market's going to go, and I don't really care. I mean, if I were trading live, obviously I would care, but for this illustration, I'm not going to care. What I'll do, I'll set up my data. I'll just load my data in. We're going to trade pound yen. And I've got about a year and a half worth of data. We're not going to be sitting here forever processing this data, but just for you to see how it really works. I'm going to now write what you see over here. This is the simulator. And in this window, you'll see the data going through, and you will also see the equity curve, the open trades, closed trades, profits, and everything else. I'll explain it as we go. Over here, this is a harvester. Those that have been using the software for some time, you guys know that this is the actual trading engine of the software. And basically, I have certain algorithms set up over here. I'm not going to go into the details. I'll just pick one, and I'll show you how I would set up the zone recovery. And the zone recovery setup is over here. Can you see that? Right up there, this window. So I've got the zone size. That's the width of the zone. I have it set up at 200. And then I have my pip move, or the zone recovery move, to the target line, from the edge or end of the zone to the target line as 100 pips. This is my spread and fees, and this is my target. I only use this target in the worst case scenario. I could put 0 to break even, but if I'm going to go through the trouble, then I can, basically at least I want 10 pips. I could put 100 pips, 500 pips, whatever. And to calculate each and every trade, basically I'll just click on calculate. And if I had it set up this way, on each turn, where the market turns from going down to up and from up to down, the software automatically calculates the size of each trade and basically gives me the absolute position. The absolute position is the difference between the shorts and the longs. In other words, whichever direction the market is going, if it is above the zone, that means the market is going up. If it is below the zone, the market's going down. And we will have an absolute position to that side, either short or long. And also, the software will calculate for me the loss at each turn. In other words, every time I'm placing a new trade, obviously I didn't hit my target yet. I didn't hit my profit target, or else I wouldn't be entering, zone recovery trades. So naturally, logically, I have to be underwater. So it calculates for me what my loss is, or drawdown, if you will, at each turn. And on that basis, I will determine whether that's an acceptable zone or whether that's an acceptable move, a zone recovery move. If I were, let's just say if I picked a zone of 100, and let's just say that I am looking for a 300 pip move, I'll do recalculate, then I have a completely different set of numbers. My favorite one that I like to use is one like that, 200, and this one I'll set at 6,000. Now you would think 6,000, that's an impossible zone to reach. And yes, you would be right. But there's a reason between my madness, and that's the fact that I dollar cost average these trades. So I will have little tiny losses along the way, and then the profits from the other trades just completely bulldozer over those losses. As those of you who are following the demos, as you're seeing it. It doesn't matter what your loss is, somehow in the next few days or next day or within a few minutes, all of a sudden there's a profit. How in the world does that happen? The reason why that happens because I average my entries. I don't just use one entry. I enter at different points, and then you have 4 trades that are long, every one of them being protected by zone recovery, every single one, right? So anyway, so let me show you. Let's just pick something here. Let's just go 200, 200 for the time being. And obviously this is for this could be for a really big account. We don't want 14 turns. We will not need 14 turns. So we can go over here and limit it to, let's just say, 4. All right. Okay. Edit. And now we're ready to trade. So you ready? That's it. So what I'm going to do, I'm going to go and feed this data. I'll run the data. Now the data is queuing up. It's running. And these are minute datas, so it will be looking at the high price, low price, open price, close price on every bar. And it will feed it really, really quickly. And we're going to start January 1 at the beginning of last year. And I don't know which well, I know which way the market is going to go because I've done this already, but it doesn't really matter because I'll run shorts individually and longs individually, so you can see how the zone recovery works. And all we do is start. And the way I have the start set up is that every time the sequence ends, new long trade will be open. We're going to open only long trades regardless of where the market's going. This is absolutely idiotic, because normally I would be looking at my setups, which I can set up in the software as well. So I would be trading in the direction of the prevailing trend. This way I'm just blindly jumping into the fire and see what happens, right? Idiotic, but let's do it. All right. So and every time the sequence stops, a new one opens in the same direction. That's the way we set it up. These will be our closed trades over here, and these will be our open trades. So in other words, the trades that get opened, will be able to monitor them right there. I apologize for having a small screen. My screen is a lot bigger, but it just reduces it to this 4:3. So now we'll speed it up over here. Now what you see, you will eventually see 4 lines. The blue line at the bottom is actually the direction of the market. Up, down, up, down. This is how the data is being plotted. On the top, you will see a blue line. These will be all the trades that this is a combination of open and closed trades. Then it will be a green line. Those are all trades that have already closed with profit, presumably. And then there'll be a red line, and the red line is all the trades that have not yet closed. Right? So As you see it, there it is. Now on this side, there's a calculator that calculates basically the closed trades. This is the open trades, and this is the combination. This is the size of the current trade, and down here what we have is is basically maximum drawdown. How much we're drawing down at any given time maximum. So right here what we have, initial trade right here, that was I'm trading 3 mini lots, by the way. This was my initial trade, and we're running the data. It obviously didn't go my direction, and on the first turn, the first zone recovery trade was opened. And now here's the market. Obviously the market's going down. Well, is there any wonder? And we're looking at it on the Forex money machine or Forex dat side. When I draw the graphs, it slows the calculations down, so I'll just let it go. And over here you see the status of the current open trades. The market's pretty flat. So far only 2 trades open. Market is going down. Again, we're only trading up. We want to see how that zone recovery works. Can you see that? There's another trade. That got third one, right? So market, we opened to the upside. Market went down. Now it wants to go back up because the third trade is long. So what you see over here, this is the status of the open trades. Now obviously what we had before, that hit the target and closed. As the market is moving, the software is automatically opening trades to the upside and to the downside, depending on where the market's going. Now, obviously, as you can tell over here, the market is pretty flat. As soon as it starts moving in one direction or the other, it doesn't matter which direction, it will close all trades with a profit, and profits will be added. Now, we could do the same thing to the short side, because logically it is, and mathematically it is really the very same thing. Last part of my presentation is very simply bringing this into reality. What all this means? Well, what this means is very simply this. There are new technologies out there, and in the 21st century, it is difficult to succeed when you are not using them. And I don't care how good of a trader you are, my experience is that the better traders are using the really good technology, the really good algos, fast computers. But the speed of the computer is not really as important, because a couple of milliseconds is not going to make a difference. Maybe to those who are scalping right next door to the exchange, because they're collecting the liquidity fees and things like that. But to you, it's not really going to make any difference. I want to demonstrate a software that is not yet available to the public, and you're probably the very first ones to see it, and obviously there are some people who are already demoing it, but there are, let's just say, less than 500 people worldwide that even have a clue that anything like this exists. And what it is a software originally called the Forex Money Machine, but we've changed the name to Forex Dynamic Auto Trader, or Forex DAT, Forex DAT. I could even use one of your guys' accounts. What do you think?
Use Eric's.
Eric's? Can I use yours?
Go ahead. This demo again?
All right. Eric started off about 3 weeks ago, right, or so, with a $100,000 account. Right now he's up to about 116,000. So that's not bad, considering he never placed a single trade himself. The thing just works. It runs. And it's set up, basically it is set up through the engine, which we call harvester. And the harvester is as a sequence of trades. It first sets up the entry, and then it has a goal in mind, and the goal is to reach a certain profit target. If it doesn't reach that profit target, then it creates other trades and opens other harvesters that help it create or reach the profit target. One of those is the zone recovery. Before we get to the zone recovery, I want to show you how the entry works. First of all, the software itself, because it's a software, it doesn't need any visual aids. It processes everything in the background. It doesn't use charts, right? What it uses is a table like this. And doesn't even need this. This is just for us to have an idea of what the software is doing. So this is what we call the trend table. And the trend table is simply a visual picture of the entire foreign exchange market, all the important currencies. I mean, obviously, it wouldn't have the Thai baht or the, I don't know, Chilean peso or whatever they have over there. These are just the most important currencies. I prefer to trade euro, pound, dollar, yen for the most part. Now, there might be a couple other ones, but I try to stay within euro, pound, and the combination thereof. What you see up on top is the different time frames. 1 minute, 5 minute, 15, 30, 60, 240, daily, weekly. These are the different pairs, currency pairs. And what you see is an arrow. And it's a trend chart, or basically we call it the trends window. So what you see is the interpretation of the charts in the form of an arrow, either a green one or a red one. The market's either going down or going up. If it's going up, you'll get a green arrow. If it's going down, you'll get a red arrow. Simple. You don't have to be looking at charts, trying to figure out which way the slope is or whatever, all that crap. You just got the arrow. That's it. You also get the average daily range right in this column. So you'll pick what you want to trade. Well, I like euro yen because it moves a lot, and pound yen because it moves a lot as well, right? So that's the first thing. Second, we have what we call the TS matrix. The TS matrix stands for trade signal matrix. These are the signals that basically are found on the different time charts. Again, 1 minute, 5 minute, 15, 30, 60, 240, and so on. And the different proprietary strategies that we use to enter the market. There's the over here, there's the basically the basic trend. Then there's the SRM, which is a combination of stochastics, RSI, and MACD. There's our probability indicator, was the probability that this market will be going up, over the next 30 minutes, and so on. Then we've got the Heikin-Ashi. We've got the different moving averages, your overbought, oversold, and so on. So when I look at a chart, and what does it say? Euro dollar. So when I look at this window, I basically see a canvas. And this canvas is painted with arrows. And the more green the canvas is, the more the market's moving up. Also, the more red the canvas is, the more the market is moving down, because the various different indicators and the various strategies are confirming what all the other strategies are saying. So if we look at Euro Yen, now, which way do you think this market's going? I'm sorry? Which way do you think this market's going? Is there any question? If you look at the chart, you would confirm that. So if I know this is how it works, when I'm setting up my trading, my harvester, basically what I'll do, I'll open my advanced module and I'll say, I'm trying to determine now my 3 steps for my entry. So I'm trying to determine the market direction. So this is how I determine the market direction. I will look at this function that says TS matrix percentage synchronized. I'll open the setup, and the setup is my canvas. And when I open it, the canvas is all blank. There's nothing on it. The software, however, allows me to paint the canvas any way I want. Now, I want to determine which direction the market is going in terms of a long-term primary market direction. So if I want to trade to the upside, what I will do, I will create by just simply clicking or double-clicking. I will say I want all of these arrows to be pointing to the upside. Right? All of these strategies. And I want all those arrows, I want at least 70% of them to be green, to be synchronized, 70% of them. So if 70% are green and less than 70% are red, which way do you think the market is going? Right? The market's going up. So I'll say, okay, this is one of my conditions. Right? So, and I will add it, or I will edit it. Now, the next condition would be, in addition to what we had in terms of the trend arrows on the in the trend table, I can click on the right mouse button and switch from just the arrows to an indicator which we call the market strength. And the market strength is a variable from minus 100, which shows in red, to plus 100, separated by 0, of course. So it goes from minus 100, which is to the downside, to plus 100, which is to the upside. And that tells me in each individual or on each individual time chart how strong that particular trend is. So I'm not relying just on a simple red and green arrow. I can also specify how strong the minimum, how minimally strong the market has to be in order for me to begin trading or to initiate my trades. So I'll get out of that, and I will set it up with TS matrix any value. And the way I will set it up, again, I'll open my canvas. I'll open my canvas, and I'll say, I want my 30-minute or my 60-minute or my 240-minute chart to show market strength of at least, I'll specify, at least 44. Now, to the upside. To the downside, I want the exact opposite. And not just that, but I will want oops, I'm trying to make this bigger. I want my primary direction to be at least a certain percentage, if I'm trading to the downside, of all of these arrows. So when all of these elements are in place, they are contingent upon each other, then the software automatically places these trades. And it will place them also based on the specific parameters that I assign. For example, to start a harvester, I will specify, to start a harvester, any one of these signals has to be present, contingent upon the market, the primary market direction, as well as the market strength. And there's my three-step entry. So after my three-step entry, once I have the three-step entry identified and set, what I will do is determine the size of my trade, which is on the basis of my account. That's very, very simple. And two, I will set up my defense mechanism. In this particular case, it would be the trade recovery or the zone. And in this case, I have the zone set as 200 with a trade recovery move of 6,000, which means that I can go back and forth and back and forth and back and forth. And if I went through the 200 pip zone, 20 times right here, my total net drawdown is only 3,600 pips. So on 10 lots, after 20 moves, back and forth and back and forth. So the market can stay there all at once. It won't be there more than the most I've ever seen it was 6 in the last 36 months. Right? But it could be there 20 times. I'm only 3,600 pips down. That's it. How do I overcome those 3,600 pips? Because I have a total of 32 different sequences running at the same time, looking for the proper time to enter the market and offset the trades that go against the original trade. That's how we do it. And it's all done automatically. In fact, it's done in such a way that you don't really have to touch the software for as long as you're trading. I mean, from time to time, you might have to go in and resynchronize it, but that doesn't happen very often. So what I'm trying to say is that there is technology available that will allow you to basically customize your entries as per the three-step setup that we talked about, as well as combine it with the no-loss zone recovery in a way that no other way I know. If you're trading manually, keep your worst enemy, which is your own emotions, in check. Never fall in love with any one trade that you place. Be prepared to get out at any time. Never ever fight the trend. Always try to trade in the direction of the trend. Not like I was doing with jumping in regardless of where the direction is going. This was just for illustration that we have a mechanism, an algorithm available that will get you out of trouble should you happen to get in one. The market always does what it wants, not what you want. Do not listen to anyone, please. The worst thing you can do is pollute your mind with beliefs that the market's going to go in one direction. It usually will go in the other direction. It will cost you. I'm speaking from experience here. At the end of the day, the only thing that matters is the price. Not news, not the NFP report or whatever. It's all bullshit. Only thing that matters is the price, and trading automation is paramount. If you are interested in setting up your demo account or real live account, I will actually be giving away worldwide 500 free licenses of the software over the next 90 to 120 days. They'll be strategically all over the world because we want the software to go out and help people make money. If you're serious as a heart attack, I mean, if you're dead serious and you would like to work with me directly to become the best trader you can be,